At least 80% of traders don't like trading slow consolidating markets, trading ranges. They feel very uncomfortable doing so. And in this video, I'm going to show you guys how to trade trading ranges properly. First, I'm going to show you guys my live trading session as I recorded. And in the second video, we're going to dive more deeper into price action rules, how to navigate to these setups. Traders, the reason why trading ranges are such a headache for most traders, it is because it goes against our common sense. We human creatures, we are hardwired to look for confirmations in nature to protect ourselves. And in trading ranges, when prices are going up, we are very tempted to keep buying, and when prices are proving to us that we are starting to sell off, we are very tempting to sell the market. This very behavior that protects us against outside forces in real life, it's actually what's going to hinder our results in trading, and we need to force ourselves and trick our mind doing the opposite. And that's what I'm going to show you guys in this video, how to navigate the trading range. But the first we need to do is we need to identify the market structure, pre-market analysis before we start trading, and we open up our chart. And what I can see is that the market started with the temporary uptrend. We have a trend line, prices broke the trend line, and we have a 2 legs to a new extreme. This is perfect price action according to price action rules. After price will break the trend line, traders will attempt to make a new extreme. After that, price is strongly pushed above the EMA. Remember guys, notice this, how prices are pushing below the EMA. This is indicating strong bearish pressure. So there are two ways to find the trend lines. We can either draw the very shortened one, something like this, or I can draw the more wider one, so I can get the confirmation from these swings, which is where somewhere around this area I started trading. And when I put it like here, what I can see a massive overshoot. Even if I copy it and make it equal on the both sides, equal distance, we have a still overshoot. So even though if I try to make it a bigger pattern, we still have an overshoot. And I made a video about overshoots. Make sure to go check it out. This is a strong depletion move. Market is being very oversold, and no, that don't mean that you are going to be plotting RSI stochastics on your chart. None of that stuff. Price action will tell you everything. Notice how far away you are from EMA. Price will not stay long away from EMA. The EMA acts as a magnet and keeps pulling prices closer to it. Take a look how every time you go away from the EMA for quite some time, the EMA will pull prices closer to it. That's how EMA acts. So we have a massive overshoot. An overshoot a lot of times lead straight to the break of a trend line or even straight up reversal. So from this point on, as we are watching the chart, we have two conflicting beliefs right here. We have a downtrend working lower, we are below EMA, we are going sideways, and we have this overshoot, and we are expecting for prices to go in the opposite direction, which we eventually did. Prices broke the trend line. It just took a little bit of time, but look at this consolidation. Does this look like a strong trend in either direction? No, it doesn't. So from that point on, this was the point in the on the chart that I draw my support and I draw my resistance, because this is the key when we are trading in trading ranges. We need to identify the key levels, because the way we trade trading ranges, we buy the lows, we sell the highs, but more importantly, we fade the breakouts. Yes, fading the breakouts. Most breakouts of trading ranges will fail. So this is why we need to reprogram our mind to go against common sense. So as the market is going sideways from this point on, what I'm going to do, I'm going to measure the overshoot, because overshoot a lot of times lead to a measured break of the trend line. And in this instance, it worked. It's not going to happen every time, but it's a good tool to look for. Perfect overshoot, perfect break. Here we have a first break above this consolidation, and notice how prices pushed above, and we have a strong rejection. At this point on, the trading range was really not that clear, because you just have all you have is this tiny little area to find your key levels. And I wasn't really sure to sell the market right here. I was definitely not going to sell the market right here, because the bar is way too big and the stim is way too big as well. But prices created a lower high setup. From this high is lower than this high, and a nice bearish bar. So this is a failed breakout above the resistance and a lower high setup. It happened so quickly, and still at this point on the trading range didn't really establish, and I wasn't sure whether I'm ready to pull the trigger just yet quickly like this. So but this is the way we want to trade the trading ranges. So this was the first potential setup according to our rules that we want to follow. We have a short-term uptrend, break, and a new high. The overshoot done what it was supposed to do. It led to a break of a trend line and created a new high of this uptrend. We have a failed break above this resistance and a lower high setup. As the prices push lower and we're starting to consolidating, at this point on, it has to be obvious to us that we're just going sideways. Why is that? Because look at the EMA. Prices are swinging up, down, up, down, up, down through the EMA. And when we are trading ranges, what we can do is make our job a little bit easier is we can use our shortened trend lines. Because just on the bigger picture, when price will break, traders will attempt to make a new extreme. It works the same way on the shorter term scale as well. We have the downtrend working lower, we have a break, new low. We have this uptrend working higher, we have a break, new high. Take a look how market likes to move in twos. This is the first leg, pull back. This is the second leg right here. This is the first leg up, pull back. We have a second leg up here. So market likes to move in twos. Two-legged pullbacks are high probability setup. But right now we are going sideways in the middle of this trading range, and I don't want to take no setups in the middle of trading range, especially when the trading range is tight like this. This is a very tight trading range. There are no strong trends up and no strong trends down. This is very choppy and very tight. So I'm really only looking for the extremes in the trading range. Prices created a break and we pushed lower. This was my first trade that I took. And why did I take these trades? Look at this strong bearish bar. A lot of people are selling directly at the very low of this trading range. This is a consolidation. We're going up and down, strong support, and a lot of people piled up selling the market right here, not knowing that most breakouts of trading ranges will fail, because this goes against, once again, against the common sense. The common sense is telling us, look how market is starting to selling off. From this point on, we're making lower highs, lower lows. So the market has been selling off for 30 minutes right now, or 20 minutes. So it has to continue working lower. No, that's not what it's going to do. You have to fade the breakout. So this was the big bearish, big bullish bar. I re-entered with the limit order. Got my 8 ticks, quick easy scalp. Market instantly stopped me out of my runner. But that's what happened. Market pushed lower once again. And here I try to take another setup, because still, this is we're even further away from EMA than we were right here. We are fairly close to the EMA. But as we didn't go much higher, because we barely made it to the middle of trading range, I was very leery of this setup. Even though I'm very leery of this setup, I have to follow my rules. Most breakouts of trading ranges will fail. So I tried to sneak a little limit order further back, because I was afraid that I might have a losing trade. So I wanted to take a smaller risk, because this failed break lower should have went higher. Unfortunately, I didn't get filled here, even though it worked. But this is another potential setup according to our rules, because once again, we broke below this trading range and we have a break and a new low of this downtrend. A lot of times these failed breakouts, you will catch a high or low of the day. It didn't happen in this instance, but it may happen very, very often. So most often than not, it can happen. As the market is pushing from the failed breakout, and hopefully you guys can see the pattern, it is nothing new to this. This is still, you're probably very unsure when you're watching this. You don't know really what's going on. You have to force yourself to fade these breakouts. That's the only way you're going to reliably trade trading ranges, especially the tight ones like this. When the trading range is large, 20 points, you can take second entries with the trends in the middle of trading range, because the trading range is large and there's big enough room for the trends to develop. But when this tight like this, you pretty much have no options than to fail the breakout. I notice how price is strongly pushed above the EMA. So what I'm going to do, I'm going to draw my trend line, just like I did all the way down to here. We have a break, we have a new high. And what am I looking at? I'm looking at the failed breakout. Once again, we broke this resistance. Important thing is that we have some sort of area right here and we push higher and we instantly turn back down. Strong bearish candle indicating a lot of momentum that failed breakout is legit. And this setup right here that I took, this was my second trade that I took, is very, very similar to this setup. Study this setup. We have a trend higher, break, new high. So uptrend played out. We have a trend higher, break, new high, uptrend played out. We just broke higher the resistance. We broke higher the resistance. Lower high setup, nice bearish bar. Lower high setup, nice bearish bar. We basically failed breakout, pulled back, and created a lower high setup. I entered below this bearish bar. I wasn't sure whether I want to go below this bar, but once we created the sideways bar, it looks very similar. This is why I dropped my limit order. Once we trigger one tick lower, we have to wait for entry. Entry needs to confirm that this lower high is valid. One tick trigger below this bar right here. I got filled and got my 8 ticks. We actually have a new high right here. First entry long, pullback, second entry long, failure below EMA. And if I draw my trend line, we are fairly confirming this setup. This is very tempting. I'm going to mark it as an aggressive setup because we have a 2 key entry points that are holding the price. Nice bearish bar, tiny little risk, but you're starting to get into middle of trading range. And when it's tight like this, you already know what can happen. So I'm not a big fan of this, but you can't deny a trap failed second entry long off 2 key entry points below EMA, and you're heading on your way down. So market context is in your favor. Unfortunately, I couldn't let my runner run. I still would have probably got stopped out here, or I may have survived, but I had to leave the office for quite some time. So I was forced to exit the runner. I put my stop loss and my target profit as close as I can just to get out of this and pay for the commissions. And I got stopped out right here. And then I had to leave the office, and I came back in and the market just rallied down, pushed down lower. So that's a little bit unfortunate, but hey, that can happen. Now, one thing that I want you guys to understand is take a look how the market is acting. We're trending from the lows to the highs, from the highs to the lows, from the lows to the highs, from the highs to the lows, from the lows to the highs, from the highs to the lows, from the lows to the highs, from the highs to the lows, from the lows to the middle of trading range. I'm going to delete this. We have a downtrend working lower. We have a break, new extreme. Oh, since I wasn't trading at this point on, this is once again another perfect setup. I'm getting a little bit ahead of myself, but once again, hopefully you guys can see the pattern. It's all the same. You have a break, new low. You have a break, new low. Failed breakouts below this support, below this key level. Failed breakout, big bullish bar after the downtrend played out. Even though it sounds counterintuitive, this is a good trade to take. And this is a good trade to take because I showed you previously, this is a healthy trading range. We're going from the lows to the highs and vice versa, up and down, up and down. This is how healthy trading range looks like. Now, when we have a failed breakout, we're expecting for price to move once again to the highs as a healthy trading range is supposed to play out, but it's not playing out like this. We push to the middle of trading range, but this is just a first move up. So we can't expect just to get to the middle of trading range, because just like we got in the middle of trading range right here, we eventually pushed higher again. We pull back lower, second move up, and once again, we couldn't even break the middle of the trading range. So these are 2 attempts to push higher to this resistance, and we got stopped at the middle of trading range. This is indicating something. When you see this, which is bearish imbalance, this is starting to show you that it's no longer safe to be looking for fading the breakouts, because at some point on, the trading range is just going to, the breakout is just going to work, and the support or resistance we felt, and we traded down into the trading range, so you're most likely going to break to the downside. So this is very important. The fact that you 2 pushes up failed to make it to all the way up to here, and we just bounce in the middle of trading range. This is very, very important. Double top right here, you're pushing lower. Very, very important here. You need to pay attention when you see this, because every single time we are nicely touching the both sides of the trading range, and now there's something different. Prices are working lower. Prices are below EMA, strongly pushing lower. What I have to do as well, I need to identify the low of the day. When the market opened, we pushed below. We have a breakout pullback pattern, and market is continuing, and we actually have a double top right here, which could be a potential sell opportunity, but we may have this uptrend working higher, even though I would be more leaning to be selling this market, because this is now holding prices strongly. At this point on, I would recommend sitting on our hands. There is a nice first entry long pullback, second entry long, big bullish bar above the EMA, confirming the trend line. I will mark this setup, but personally, I'm still a little bit leery of this low of the day. We have a nice double confirmation. I would be expecting potential some push down, but we'll see. We can easily push higher, and this trend line may hold. It all depends how the market will prove to us. But hopefully you guys understand how to trade the trading ranges, you need to draw the short-term trend lines. You need to sell the breakouts to the upside, buy the breakouts to the downside. And when the market cannot reach the other extreme, this is indicating you something, and you need to be very, very careful. So if you like the video, if you got anything useful out of this, please hit the like button. I would really appreciate it. Subscribe to the channel if you are new. And remember guys, study your charts at the end of every day. This way you will really push the information through your brain quicker. You need to do the work after the fact. You need to trade it live, so you learn to push the button and watch it live. And after the market is done, you want to learn from your mistakes and study the setups that you took and they failed, and study the setup that you took and they were winners. That's the only way how you're going to learn. So take care, everybody.